question for Neil. So this is more of a process question. So in terms of your work as a demographer and how you integrate that into kind of the investment sphere, so these kind of the demographic trends are these secular underpinning for they're kind of glacial realities, but they're not particularly investable on a weekly or a quarterly basis. So how do you kind of take these longer term views, either boil them down or narrow them and apply them from an investment perspective?
Well, I do two things simultaneously. So one is kind of the quantitative side, which is what are you talking about? Yeah, demography moves at a glacial pace, right? Let's face it. You're not going to wake up one morning and say, "Oh my God, it's trending higher today." But I will say that there are often surprises, and people are very slow to be. Let me just tell you one, which is actually a big significance in markets. This 2 years ago, everyone thought that we were going to go back between 1.5 and 2 million housing starts a year, because that's what we were the decade before 2007. We're going to go. We had a right to go. We were entitled to go back there. We were going to go back there, right? And I pointed out that according to the new census projections, because partly due to declining fertility, but mostly due to a huge decline in immigration, net migration to the United States, we had far fewer new adults every year in America, and it was because we're now kind of a mature, society demographically, with native deaths kind of canceling out native births. It's the migration, which is really the huge extra increment every year in the number of adults. And everything else is just musical chairs with regard to housing. Everyone's got to stay somewhere.
Right.
And the number of people per household is actually surprisingly constant over time. So we just said, look, migration is not only down, it's likely to stay down because of lower fertility in Latin America. There are a lot of long-term structural reasons why we think it's going to stay down, even if the economy recovers. And that led to very different kinds of projections than what other people. So sometimes simply understanding the underlying quantitative drivers changes our view. On the other side, a lot of what I do is qualitative. So, and this is kind of very unique to me, and that's kind of my generational method. So I'm always looking at how a group of people born in a certain era is shaped in their childhood, shaped in their coming of age period, coming of age into adulthood, in their attitudes and behaviors in a way which ages with them over time. And what that does is it gives you an incredible forecasting and predictive device, because that group is constantly entering a new age bracket. So if you want to understand how boomers are changing what it means to be retired, how Gen X is changing what it means to be a parent and a leader today, how millennials are changing what it means to be a young adult, that's constantly generating new ideas and investable themes for you throughout the economy. So that is always breaking with us. And our work actually often focuses on how millennials are buying hotels differently, or how they're moving into homes differently, or why micro apartments are popular, or why are boomers living with their kids, now that they're in their set. Why are all these things changing? And very often it has generational roots. So in that aspect, we come out with kind of breaking generational themes all the time.